The market does not care if you are smart, it only cares if your timing is bad. Most traders lose money for one simple reason. They show up at the wrong time, with the wrong mindset, and then act shocked when the market slaps them in the face. This video is going to show you why timing is the real edge, how the pros enter, why amateurs keep getting trapped, and how to stop turning good ideas into bad trades. The crazy part is, most of the damage happens before the trade even starts. Let's get one thing straight right now. Trading is not a game of guessing. It is not about having the fanciest chart, the cleanest indicators, or the loudest opinion. It is about reading what the market is doing right now and stepping in when the odds are on your side. That sounds simple, but most people do the exact opposite. They buy because they feel excited. They sell because they feel scared. They chase because they are late. Then they blame the market like the market personally insulted their family. Here's the truth. The market is a giant crowd of emotional people moving money around in waves. And if you keep jumping in at random, you are basically diving into the ocean during a storm and wondering why you keep swallowing water. The pros do not trade like that. They wait. They watch. They look for signs that the crowd is exhausted, trapped, or ready to move. Then they strike. That's where timing comes in. Timing is not just the moment you click buy or sell. It is the whole process of knowing when a move is starting, when it is tired, and when the market is setting a trap for impatient traders. That is the real skill. Not prediction, not hope, timing. Now let's talk about why most traders get wrecked. They are taught to chase the obvious. They see a stock ripping and think, I better get in before it leaves me. So they jump in late, near the top, right when the move is already stretched. Then the stock pulls back a little, fear kicks in, and they panic sell. Or worse, they hold and pray. That is how a small mistake turns into a painful one. A better way to think about it is this: every move has a beginning, a middle, and an end. Most beginners only notice the middle and the end. They see what is already obvious. By then, the easy money is usually gone. The professionals are watching the beginning, when the move is still quiet. That is where the edge is hiding. Think about a real crowd for a second. If a concert is about to start, the smartest people are not rushing in after everybody else is already screaming and the doors are nearly closed. They are arriving early, getting in position, and waiting before the rush starts. Trading works the same way. You want to be there before the crowd piles in, not after the stampede has started. Now here is the problem. Even when traders understand this in theory, they still mess it up in practice. Why? Because the market plays with your feelings. It makes you feel like you are missing out. It makes you feel like the move is already gone. It makes you feel like if you do not act right now, you will never get another chance. That feeling is dangerous. That feeling is how people buy the top and sell the bottom. So what do the pros do differently? They look for structure. They look for behavior. They look for signs that the market is shifting from one state to another. Not just random candles, not just noise, but actual change. For example, if a stock has been falling and suddenly stops making lower lows, that matters. If volume starts to dry up while price holds a level, that matters. If a breakout starts to build with tight price action and controlled pressure, that matters. In other words, the market leaves clues. The trick is knowing which clues matter and which ones are just smoke. One of the biggest mistakes traders make is entering too early because they want to be first. Being first sounds cool until you realize it often means being wrong first. There is no trophy for suffering early. If you enter before the market is ready, you can be technically right and still lose money. That is one of the cruelest parts of trading. You can call the direction right and still get punished because your timing was trash. And that brings us to the most important lesson in this whole video. Being right is not enough. You have to be right at the right time. Let me say that again because it matters. Being right is not enough. You have to be right at the right time. That one change can save a trader years of pain. Here's how the market usually works. First, there is the quiet phase. Not much happens, nobody cares. Then there is the buildup. Price starts tightening, pressure builds. More people start noticing. Then comes the expansion. The move takes off and suddenly everyone wants in. Then, right when the crowd gets greedy, the move starts getting tired. That is the full cycle. Most traders enter during the excitement part. That is usually the worst time. The pros are much more patient. They look for the quiet buildup. They wait for the market to show its hand. They do not force trades just because they are bored. They do not trade because they feel like they should. Boredom is expensive. It has probably blown up more accounts than bad charts ever did. Now, let's get into the real challenge. Even if you know all of this, it is still hard to execute because your brain wants action. Sitting still feels wrong. Waiting feels boring. Watching a move happen without you feels painful. And that pain makes people break their rules. That is why trading is more mental than technical. You can learn a pattern in a day. You can memorize support and resistance in an afternoon. You can watch 100 videos on breakouts. But controlling yourself when money is on the line, that takes work. Real work. The kind of work most people avoid. This is where risk management becomes part of timing. If your position is too big, every tiny move feels like a disaster. Your emotions go wild. You cannot think clearly. You cannot wait. You cannot execute. You are no longer trading the market. You are trading your fear. That is why size matters. If the position is small enough that a loss does not wreck your mind, your timing gets better. You can breathe. You can wait. You can stick to the plan. And when the setup is actually good, you can act without flinching. Another thing most traders miss is that timing is not just about entry, it is also about exit. A lot of people obsess over when to get in, but the real money can be made or lost on the way out. A great exit can rescue a decent entry. A bad exit can destroy a great one. That means you need a plan before you enter. Where are you wrong? Where do you take some profit? Where do you let it run? If you do not answer those questions in advance, emotions will answer them for you later, and emotions are terrible portfolio managers. Now let's talk about how to improve timing in a real, practical way. Start by studying only one market or one setup at a time. Do not act like you need to trade everything under the sun. That is how beginners end up confused, overtrading, and learning nothing. Pick one thing. Watch it over and over. Learn how it behaves when it is strong, weak, tired, and ready to move. The more you study one thing, the better your instincts get. You start to notice things other people miss. You see, when a move is real and when it is fake, you stop reacting to every shiny candle and start understanding the bigger story, and that is the key. Trading is a story. The chart is not just lines. It is a battle between buyers and sellers. It is pressure, fear, greed, exhaustion, and momentum all fighting for control. If you can read that story, your timing gets better. If you cannot, you are just guessing in a loud room. Here is the part nobody likes to hear. You will still make mistakes. Everyone does. Good traders do not avoid every bad trade. They avoid big damage. They keep the bad trades small. They wait for high-quality setups. They cut losses fast. They protect capital so they can stay in the game long enough to get paid. That is why patience is such a weapon. Patience does not mean doing nothing forever. It means doing nothing until the odds are actually good. That sounds simple, but in trading it is rare. Most people want action. The market wants discipline. Those two things are not the same. So, if you want better results, stop asking, "Can I predict this move?" and start asking, "Is the market actually ready?" That one question can change everything. It pulls you out of fantasy and puts you back into reality. And reality is where profits live. The biggest turning point for most traders comes when they finally realize the market does not reward effort, it rewards timing. You can work hard, study hard, and still get crushed if you keep entering at the wrong time. But once you learn to wait for the right setup, the whole game changes. The same market that used to feel random starts to make sense. That is the moment everything clicks. Not when you find a magical indicator, not when you discover a secret pattern. When you stop forcing trades and start reading the market like a living thing. If you want to survive in trading, timing has to come first. Not opinions, not ego, not excitement, timing. Wait for the setup, respect the structure, keep your risk small, and never forget that being early and being smart are not the same thing. The market is always there, but the right moment is not always there. That is why patience pays. If this helped you, hit the like button, subscribe to the channel, and drop a comment about the one trading mistake you're working on fixing. Are you ready to take your trading to the next level? Click the link in the description now and find out how. In the meantime, watch the next video on the screen because it goes even deeper into how pros read price before the move starts. See you next time.